Picks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Okay, your first pro pick is Dollarama. What a darling Dollarama has been. Its quarterly results, I think on a day when the market was selling off, Dollarama still hit an all-time high. So it's still growing, and Canadians are pinching pennies, pinching dollars, and it benefits Dollarama.
Right. So I've followed this company for a very long time. I actually invested it when it went public in its IPO. And what I like about this company is that it's very cash generative. And it's self-financing. It was self-financing when it was just only in Canada. And there were a lot of levers that they could pull when they went public in terms of expense saves and bringing IT systems and labor savings. And they've done all that. Their margins are unbelievable. I think their EBITDA margins are 3 times Canadian Tire company that we talked about earlier. And now they've announced that they are expanding sort of in South America, and they recently bought something in Australia. And Mexico, they're just starting to get started. And that's all self-financing. They're actually not only self-financing, they're actually to be able to pull dividends from the South American up to the parent company.
So this is an important point. They're not levering up with debt.
Absolutely not, no.
And so they're expanding into markets that are going to immediately add to their bottom line.
Correct. I mean, Mexico will take a little bit of time, but that's not unusual for a new geography. So I think they're excellent merchandisers. They know how to buy. They know how to package, and like they're cash flow generative, and they also appeal to the consumer in this kind of environment.
Because they're not in the U.S., do they get hit by tariffs at all?
They get hit by tariffs. No, because they import from Canada from China, so they would not be impacted by that.
So this is like one of those unicorns when you were saying we're trying to find non-recession, tariff impacted stocks. Like Dollarama really stands out.
Yeah.
So you've owned this for a long time, or you've owned it, since the IPO. Like, is that a steady hold, or are there times to own Dollarama and times to rotate out, or is it just a constant?
To me, it would be a core holding in a portfolio.
Okay, let's go to your second one, Intact Financial, car insurance, property insurance. Why do you like this one?
I've owned this one actually for a long time and have followed it once it's gone public too. And this one, I would say, would go through periods of, times to have a bigger position and times to have a lower position, depending on where we are in the insurance cycle. But I think also of it as a core position. And right now, we are in an environment where insurance rates are still pretty strong. And, talk to your birthday party people. Are they complaining about their car insurance and their house insurance and business, which tells you that there's still pricing power in the environment. So I like that because they have good visibility in terms of pricing. And if there's a change in the environment, their duration of the liabilities is only a year, so they can reprice. It's unlike a life insurance company, which duration is much longer. So I like the fact that they can reprice annually. Secondly, they've been a great job in terms of controlling costs, vertically integrating, getting partnerships with auto dealerships. So I like that, their cost discipline. And then they've been very successful at acquiring different companies. And in particular, they bought U.S. Specialty in the U.S., which is a very niche, has better chances of holding price because it's a niche market. And in the U.K., they've also bought some operations. So I think, they're well operated. It's a good hard market, good control costs, core holding.
And it's outperformed. It's outperformed over the last year. And when the market has been selling off, Intact has held up. I guess the question is, can those gains continue?
It is considered a defensive financial. So if people are less likely or more concerned about the banks because of credit, I think it would be a financial that people would want to own.
Let's talk about your third one. Another one that's done remarkably well is just a couple % away from an all-time high. That's Loblaw. Mm-hmm. Talk about why it's the right stock for this environment.
So Loblaw, out of all the grocery stocks that are publicly traded, have the most exposure to discount, no frills. And no frills in the last couple of years, if you listen to the conference calls, the conventional shop or the conventional stores has been losing share to the discount. And they've been able to maintain their market share and gain probably because of their exposure there. So I like that. Secondly, they're well capitalized. They've been buying back stock. They've actually also benefited from food inflation. They've done a fairly good job at controlling costs, although labor has been a bit of a problem for them. So I do like Loblaws. I think it is a staple. And I think they will benefit because even in a tough environment, people will go to the grocery store.
Is it too expensive? Like the stock, its current PE is 30 times, which sounds high.
It is. And I would say Dollarama is not cheap either. I think you pay for quality of management teams. You also pay for, their financial discipline. And both of those companies are buying back stock quite heavily right now. So, we own both. Yeah.
But Dollarama has margins, right? And they're doing really well because like from $1 to $5, they've been actually steadily increasing their prices. That's been a big part of the Dollarama story. Not increasing prices, but selling more goods at more than $1. Loblaw grocery, those razor thin margins. I often wonder why food inflation coming down isn't a bigger problem for Loblaw. Like, is it because they're able to offset it through volume at no frills?
They are. I caution sometimes they will say themselves, food inflation is good, but to a certain point, because at a certain point, the consumer is not going to buy. So then they will suffer from volume coming down. But right now where inflation is, they're benefiting.
And they've been like just going into the stores. It's like the next day they had Buy Canadian stickers on everything.
Yeah.
They have now the little T symbol if it's affected by tariffs. So I mean, that's a very quick turnaround at all of their stores to like really quickly communicate with their customers.
Yeah, I'd say their marketing is pretty good.
All right, Jeannine, I've had a blast. Thank you so much for joining me this episode.